Hi, my name is Dwayne Squires,
My name is Richard Muse.
and in this video we're going to share the pros and cons of investing in property in the North East. So let's start off with the cons.
First con is tax. Tax, George Osborne brought in a few years ago where you could claim your full amount of your mortgage repayment against your tax. That has stopped. It finishes in 2020 and it's generally just been tapered. Now what that means is that you could use that full amount against your tax. So if you paid, for instance, £250 on one property, you could have that allowed against your tax. You're not able to do that from 2020. It's certainly been wiped out. So you will have a much higher tax bill.
The second con is the return on cash. So what does that mean? So you could be looking at different avenues of how to invest in property. Now, one of those options is actually just to buy the property outright in cash, which can be really positive in many cases, but it can also be a con. Now, one of the cons, it means that the return on cash you can generate would be reduced. Let's give an example. So if you buy a property that has £100,000 and you buy it in cash and it has an annual revenue through rent of £5,000, then that return is 5%. However, if you use the mortgage and you've got a loan to value of 75%, the deposit, i.e. the cash that you need to invest with, would just be £25,000. But if you look at the return on that, that would be 20% return. So you can look at the differences, a 5% return just for investing with cash, or it's a 20% in return for using a mix of cash as well as a mortgage. Third one?
Momentum, it's really, it's how many properties you want to buy in as short a term as possible. So if you're buying for cash only, and you've only got one pot, you're probably not going to be able to buy as many properties in the term that you want. Now, say if you want to buy, say, 5 properties over 5 years, and you've tied all your cash up in the first property, it's highly unlikely that you'll have enough cash to go and buy a second one outright for cash. So it's talk about leveraging up your buying. So by that I mean what you would do is, obviously, like Dwayne said, you take a mortgage out on your first property, you pay a 25% deposit, and that buys you a property. Now, if you, like I said, you've got £100,000 to invest, that allows you to buy 4 properties because you've got 4 deposits. So therefore, the momentum is much greater than just buying simply for cash.
So now let's look at the pros of using cash to invest in property in the North East. So one of those is actually discount. So by having cash, you have an ability to move more quickly versus using a mortgage. And by having that speed on your side, the ability to negotiate a discount at a larger percentage than using a mortgage lender would actually be higher. So, you know, when you're looking at investing in properties at a discount, one of the key motivations for a vendor is the speed at which you can sell. So they're more likely to exchange a price, i.e. give you a higher discount in exchange for the speed and certainty that you have with using cash to invest. Another advantage of using cash to invest in property in North East is actually you have no limitation on the type of property you can invest in. So we've got a video which we can send you a link of just by clicking above the button above, which goes into detail around the several options you have with financing a property. However, there's a threshold, and what that threshold is, if you have a property that you're purchasing for less than £25,000, the chance of you getting the finance needed is very slim. Now, by having cash for a property purchase that's, let's say, £15,000, which is what you're purchasing it for, but it's valued at 35, 40 or plus, the investor that doesn't have that necessarily cash is going to potentially miss out. But you, by having that cash, would be able to move on that property with limited competition. Another example could be a property where it's wholly derelict, it needs a lot of work, it's actually unmortgageable. So the options are limited. There's a chance to get a bridging loan, but at adverse interest rates. But by you having the cash, you're able to exchange that property and also potentially get a bigger discount on that property too.
The other one is we're going to refer back to is tax, where it's a con on that side, as you've got to, you don't have the allowance on your monthly payment. When you pay with cash, you don't have a monthly payment. You still have a tax liability, but all that money is going into your pocket, and that is very beneficial.
So just to wrap up, so when you're investing with cash in the North East, there's several pros and cons, and we've only gone to a few. But one of the key things to consider is your personal circumstance. So if you're an investor that is more conservative and you want to reduce the risk of, for example, high interest rates or a tenant not paying and then yet you having arrears to being able to pay your mortgage, it might be preferential to actually invest with cash. However, if you're looking to scale quickly and you can manage the risk that could come with higher interest rates, investing with a combination of cash as well as a mortgage would also potentially be an option for you. Thank you very much for watching our video. If you found it useful, please can you click the like button as well as follow our YouTube channel by subscribing to it. That will then mean that when we release new videos in the future, you'll be notified of those.
Once you've liked and subscribed, why not watch other of our videos by clicking the thumbnail on the right-hand side? This will take you to more helpful videos for you to watch.